Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that reported earnings today after the market closed, and then we're going to look at a couple of the stocks that are reporting before the market close or before the market opens tomorrow, and then we're going to be looking at some stocks that are going to be reporting after the market closes tomorrow. Okay, so first up we're going to take a look at Texas Instruments. They reported today, and as you can see here, they closed up closed up fractionally on the day. A black candle did form today. It did form that. So basically, you've got this downtrend going with the candles forming below EMA 4 at 99.60, and you can see here it's hitting this 200-day simple moving average zone. That lower wick is getting close. It came down here and hit this key support zone from back here in February, and then now in after hours trading there was a favorable market reaction after hours, and so it's trading at 104 right now, and so that's going to be it's going to fluctuate, I'm sure, before the market opens tomorrow, but right now it's at 104 after hours trading. You're looking for, if you're a bull, a break above the 50 and 100-day simple moving averages here at 105, and so trading above 105 for Texas Instruments tomorrow will be bullish. It will need to stay above that level. If 105 turns into resistance, that could signal the top of the move, because you can see here that was the top from back here in April. This 105 level has been the key level to break. If you see a break above and a close above tomorrow, that should be the signal. Yes, Texas Instruments is responding favorably. Now, if this is a head fake at 104 and they sell it off, one signal to look for would be a black candle forming. You can see this black candle down here. If there's a gap up open tomorrow and it starts trading below the open, that would be a red flag. Okay, just something to think about. If it comes back down, all that needs to happen right now is turning this middle Bollinger Band into support. Okay, so it needs to get above this 102 level, and if that level holds, a new uptrend could begin. Over here, it tried to get that middle Bollinger Band, tried to turn into support and failed, and kept pulling back. The downtrend continued. So once it can hold 102, break above 105, that would be the signal that Texas Instruments wants to head higher. Okay, now let's look at WYNN, WYNN. As you can see here, it closed down 1.68%. It formed a bearish engulfing reversal pattern today. So that was a red flag, forming a strong bearish reversal pattern heading into earnings. That did signal downside risk. Also, another red flag was the close below EMA 4 today. The candles were riding above this pink line, and you could see today it closed below. So those are just some indicators that the chart wasn't strong heading into the close, heading into earnings. They did report after hours. The market did sell it off. It's trading right now at 185. You can see the key support level to hold is this dotted purple line, which is the middle Bollinger Band, also the 20-day simple moving average. If that level holds at 184.50, then that's going to signal that this uptrend is still intact. So tomorrow, if you see 184.50 as resistance, if WYNN is trading below that, you could see a drop down to the 50-day simple moving average at 177.57. That level was tested back here in March, and so that's going to be the key level. If it can stay above 184.50, then that would be that would be considered, I guess, a victory, considering that it's down in after hours trading. So it has to hold that level to keep this uptrend going. It's going to signal downside risk if it drops below. Okay, let's look at iRobot. So they did close down 1.45% today, but believe it or not, there was a favorable reaction to the earnings. It's currently trading up here. I believe it was around 61.50, between 61 and 62. It closed after hours. And so the big thing tomorrow is going to be getting above the pink and lime lines, which is EMAs 4 and 8. if IRBT is trading above 62.50 tomorrow, that's going to be bullish. That's going to be a signal. Okay, yeah, it actually is responding favorably. It's trying to reverse, and then it's going to get above EMA 13 at 63.57, and then the middle Bollinger Band at 64.71. Those are the two big levels. As you can see here, this dotted purple line once again is the middle Bollinger Band, 20-day simple moving average. It failed to hold that level here, and then it failed to hold again here, and it pulled back. And so once again, if it comes up to that 64.71 level, and that level fails to turn into support, that's going to be once again the profit taking zone. It's been the profit taking zone. Once IRBT closes above the middle Bollinger Band, and then this 50-day simple moving average, the green line at 66.34, that would be the clear signal that, okay, yeah, this is looking strong. And why I say that is look over here in December, okay, when this candle closed above the middle Bollinger Band after trading below, and then the green line then this candle traded above the, closed above the green line, and that signaled the uptrend. Back here when it hit the 50-day simple moving average, it failed to break and it pulled back. It was the close above that signaled that breakout higher. So that's what you're looking for this setup if you're a bull. Now let's say that it was a head fake tonight, and this isn't a bearish downtrend, and they do sell it off. How you'll know that this is under pressure if it trades below 61. 61 is EMA 4. If that's resistance, that's going to signal downside risk. If it drops below 59, that was the low close here. Then you have this 58 level. That was the low close in February, and then 56 below. Okay, let's look at AMGN. This closed down 1.5% today, and then they did report after hours, and the market did sell it off. Not heavy. It closed at 171, and after hours trading after closing at 171.94. So that's not a big beatdown, but it did break a key support level. And so tomorrow, and this is all just my own personal opinions and theories and strategies, and so I'm just sharing that with you. But in my opinion, if it fails to break back above 171.51, that's going to be a red flag. That's been holding. That's the dotted purple line. Once again, the middle Bollinger Band. Notice how each one of these candles formed above that level. It had been turning into support. Right now, it's below that level. If it's trading below 171.50, that's going to be a red flag. That's signaling a possible downtrend. It's been trying to break. There was a downtrend that started over here on the 19th of March when it closed below that middle Bollinger Band. You can see the candles drop down, and then it closed back above over here on the 17th of April, and it's been trying to get a new uptrend going. This blue line right here is a major support level. This is the 300-day simple moving average, currently at 172. If that turns into resistance, that's going to be a red flag. What you could see to the downside is 168 and 166 tested. Those are the two levels that are likely to be tested if that 170-150 turns into resistance. Okay, so before the market opens tomorrow, Boeing is going to be reporting. Keep in mind that Lockheed Martin reported today, and they got severely destroyed. So they were punished today, and so not sure if the same fate's going to be for Boeing. We never know. I mean, the market has been so crazy volatile. We'll just have to see how it responds to tomorrow at the open but before the market opens. And so basically it closed today, I mean, with the big red flag. It had been trying to turn this green line into support, the 50-day simple moving average at 339, and it dropped back below. And then it also broke the key support level, which is the middle Bollinger Band at 331. You don't want to see that level turn into resistance tomorrow. So tomorrow, if it's trading below 331, and then also the biggie is going to be 325. I mean, if Boeing breaks below 325, that would be major downside risk. Back here in March, you can see, and in April, this gold line, which is the 100-day simple moving average, held. It actually held today as well. You can see it's been the low level. People have been loading off of it. They have the algos set to load, and if they switch the program to sell and that level turns into resistance, that would be a major bearish change in trend. Now let's say tomorrow the street industry is loving it, and this baby has gets some legs. You'll know there's upside potential by whether or not that 50-day simple moving average at 339 is turning into support. You want to see a close above that level. A close above that level would be a good sign that Boeing wants to head higher, and then you'd be talking about actually working its way back up to that 355 level. It's going to be a big day tomorrow for Boeing. We'll see what's going to happen. There was a huge volume spike. Notice that it had the declining volume pattern, set up into a volume spike. They could have pulled it back to load, and then they're going to push it higher. You never know. It's just all about, so going forward, the two levels, to make a long story short, below 325, that's going to be major downside risk. Actually below 331 is a red flag, and then below 325 is major downside risk, and then to the upside above 339 signals upside potential. Okay, another stock that's reporting tomorrow is SIRI, ticker symbol SIRI. It closed up, nearly 1%, or closed down, I'm sorry, nearly 1% today. And as you can see here, it's trying to hold that middle Bollinger Band and the 50-day simple moving average. I mean, I hadn't looked at the SIRI chart in a while, and yeah, this is pretty impressive how it's been able to hold up with the markets pulling back and being under pressure. This is still in an uptrend on the daily chart. It has to stay above that 50-day simple moving average and middle Bollinger Band. So going forward tomorrow, if if there's a negative reaction pre-market and you see 625, that's the middle Bollinger Band, turn into resistance, you could see a drop down here to the 610, 615 level. The 610 was the low close, right about 611 or so, 610, and then you have this other low close here. This is the bottom of the channel, 617, 610. If it were to, basically if it goes below 625, that's going to be a major red flag. And then to the upside, if it can break out above the close here on the 19th at 635, above 635 is going to be bullish. Okay, that's the recent high close. Okay, so that's been the highest close in the month of April. If you see it trading above 635 and closing above that level, that's going to be a very positive reaction to earnings, and you could see it retrace back up to 660. Okay, and the downside risk is if it breaks below this lower Bollinger Band at 610 and this low close at 612, that you could get the drop down to that 100-day simple moving average at 593. Okay, let's look at Facebook. Now the next, those are the two that I'm showing you that are reporting before market opens, and then the rest of the stocks in this video will be reporting after the market closes tomorrow. So you do have the trading day tomorrow to make some decisions if you want before before the earnings. Just keep in mind it's always a gamble taking a position heading into earnings. You basically have a 50-50 shot of getting the earnings right, and you could they could come out with good numbers and everything could look great, and it could still sell off. So and you could everything could you just there's you're taking on a lot of risk loading before earnings. Keep that in mind. But that's if you get it right, that's where you could have the opportunity to make some good money. And so yeah, it's a risk versus reward thing here for Facebook. You can see it broke down big time. I mean, this is not what you want to see if you're a bull. It dropped below that 300-day simple moving average. I mean, this blue line had been holding this whole time since it closed above back here on the 10th, and then today, following three red candles, it broke down below. That close below the middle Bollinger Band at 161. That's a major red flag. I mean, they did talk about how they're going to be increasing their spending for security. They're going to be hiring all these new employees. I mean, it sounds like they could have a good. I don't want to get into the fundamental side of it. I'm not claiming to be an analyst, a fundamental analyst. I'm just saying that they're gonna the earnings, the forward-looking earnings may not be so bright, considering they're going to have a lot of extra overhead going on. And so what you're looking for to the downside, if it heads that direction, is a retest of the recent lows here, and the low close is 152. And then you have the low down here in the 140s. So if this middle Bollinger Band at 161 turns into resistance, you could see it work its way down to that 150 to, that high 140s to 150 level. That zone down there, if it gets retested, you're likely to see people reload. To the upside, now let's say the market responds favorably and everybody's back in love with FANG and Facebook is rocking. You'll know that by whether or not it gets back above that 300-day simple moving average. First of all, if it's trading below 161, that just means bearish, right? That means downtrend, major red flag. This was a risk to hold long overnight with the chart setup if you're a technical trader, just because it closed below that middle Bollinger Band. That signals the possible start of a new downtrend. Why do I say that? Because that's what happens, many times when you get a close below, like this candle here, close below the middle Bollinger Band and the downtrend started. And so basically, if 161 turns into resistance tomorrow, you have a good chance of seeing this working down to, the high 140s, 150 level. Now, if it breaks out above 161, the big level is going to be 164. If it can't get above that 300-day simple moving average again, that'll be a major red flag. So above 164 is going to signal upside potential. Below 161 signals downside risk. Okay, let's take a look at AMD. All right, so they're reporting as well tomorrow. This has held up really well. It got back above that middle Bollinger Band. It's holding that level. You can see there's been 6 closes in a row above 994. So going forward for tomorrow, if the middle Bollinger Band is holding and it's staying above 994, that signals the uptrend is intact. Okay, that is signaling the uptrend is intact. I mean, we had Texas Instruments. They reported today, and they crushed it. But we've had other cases where the semiconductors have reported and they've been destroyed. So. It's an individual case. It looks like each company is going to be either destroyed or they're going to have a good day individually. It's not going to. It doesn't look like it's a sector-wide thing. And so AMD, it's going to be all about whether or not the street likes the earnings report. Okay, so above $10 is going to be bullish. If it can stay 10 and stay above 10, that's going to be bullish. If it drops below 994, that's going to be the red flag. I mean, it's that easy right now with AMD. It just depends on how long you want to sit here and wait while it's getting this uptrend going. If it stays above 10, that signals it's got upside potential. Drop below the 990s, that's going to signal downside risk. To the upside, what you want to see is a break above this high close horizontal resistance level, which is around 1050 or so. Okay, the closing price on the 17th, that's the big level. And you can see here with the recent low is lined up with the $10 here, and so that's the big support level. If you see 10 turn into resistance, that is going to be your red flag. Okay, let's look at Qualcomm. So Qualcomm has been getting punished, and it has a very nasty downtrend. I mean, the shorts are loving this. I mean, it's just been totally destroyed. They've ran it from all the way up there at 68 down here to below 50 now, and so heading into earnings, I mean, they're just driving this thing into the ground. So I mean, from a technical perspective, it's looking like it should set up for a bounce. Okay, I mean, I don't know about how bad the earnings are going to be or what the story is, and maybe it's just so bad that it's going to keep plummeting. If it doesn't hold here, this is going to be a major red flag. You can see it's trying to bounce here off of this October low close. Okay, this is a support level that it broke below today, and so the last line of defense is this September level. On this chart, the last line of defense is going to be this around 49 here. It's going to need to bounce off this 48 to 49 because you have the bottom of this wick here, and so you got this 48 to 49 level. This should be the bounce level, especially it's formed 5 red candles in a row. So how you're going to know by whether or not this is trying to reverse is by whether or not it can get above the pink line. That's 5120. So above 5120 is going to signal that the bounce play is trying to heat up, and then it'll have to get above EMA4 at 5240. If 5120 remains, if that EMA4 remains resistance and it can't break that 51 resistance zone, then that's going to signal more downside risk. You don't want to, if you're long, it's very dangerous trying to catch the falling knife. knife. What you want to do if you're trying to play a stock like this that's in a major downtrend and it's pushing hard to the downside is try to time your entry with the intraday charts. I'm showing you all daily charts here, and we use that to find key support and resistance zone, but you use an intraday chart to time your entry and exits, and so for trading, and so you'd want to time any type of entry with Qualcomm with the intraday charts turning bullish, just to keep that in mind. But keep an eye on it for a technical bounce off of 48, 49, and look for a break above 51 to signal that the bounce play has started. Okay, let's look at PayPal here. This is ticker symbol PYPL. It did get hammered today, closed down nearly 4%. You know, they just drove this thing into the ground. Look at that huge red candle. This isn't is similar to Qualcomm. I mean, this is they're driving it down hard into earnings. Okay, so we'll have to see what happens tomorrow if the markets are still under pressure. The last time I checked, futures were down, and so yeah, we'll have to see how it goes in the morning. You know, if Boeing, if the markets respond favorably to Boeing, that could be something that could get the markets cooking. We never know. I mean, there's so much going on. I mean, it might have to just do with the 10-year, and if that drops below 3% tomorrow, then you know, maybe that would get people more bullish. We'll just have to see. There's so many variables happening. As far as PayPal goes, what you're looking for is a bounce off of the 74 level. Okay, that's the low close right here of April, and so it needs to hold that 74. If 74 breaks, you have the low close in February that's likely to get retested down here around 72.50, and just below that's the 200-day simple moving average at 71.31. So yeah, 4 red candles in a row. You know, are there 4 red candles in a row in the last several months? There aren't. You know, this is a major pullback, and not on very big volume either. Look at the volume down here. You know, compared to the big volume, look at the volume on the February pullback, and then look at the pullback here. You know, it's not a heavy volume pullback. So you know, they were able to drive it down on fairly light volume here. It's such a big move. There's just a lack of buyers right now, and so if they want to push things to the downside, they can push it to the downside with ease right now because there aren't buyers stepping up. Okay, and so basically to the upside, it has to get above the middle Bollinger Band at 76.78. You know, that's right here, and then once it gets back above that 50-day simple moving average at 78.20, that's when it can start moving up to the upside. Basically right now, below 77, it signals downside risk, and then yeah, above 78 will signal upside potential. Okay, but yeah, look for a technical bounce off the 74 support zone. If that it doesn't bounce off that level, you might want to just shoot for that 200-day simple moving average at 71. Yeah, let's look at Visa here. Okay, so Visa is another one that got pummeled today, closed down 2.5%. You know, so they're reporting after the market closes. You could see here it has this. You know, you could see the what kind of descending resistance here. It's been trying to break above. I guess we'll just put that right there. But the bottom line is that this has been trying to break a key resistance zone here, and it's just been failing. You could see all the candles that have hit right here. You know, it came up here, made the high, came back, and notice how it made a lower high. You know, so it made the lower high, then it came back, and so now it's stalling out at the same level at 125. Basically, to head higher for Visa, it has to break that 125 resistance zone and then get above 126, which was the high close there in January. Today, it closed below that 50-day simple moving average, currently at 121.46. You know, it needs to get back above that level and then hold that middle Bollinger Band currently at 120.77. Basically, we'll call it 121. You know, if 121 turns into resistance, you know, you're likely to see a drop down to this 100-day simple moving average at 119. Look at all the candles that bounced off that level. So far, the 100-day simple moving average has been the reload zone. That's been the historical pattern. Look at February. Look back here in December. You know, each time it's gone down and hit that 100, it's been the reload zone. So you have to anticipate history repeating, but keep an eye out for a change in trend. And so if it were to drop below that 119 level and then it turned into resistance, that would signal, you know, a bearish change in trend, that this 100 is no longer holding. If it does hold when tested like it did back here, you know, this was the reload zone, and then, you know, people were rewarded with a nice run further. Now going forward, you know, basically if it can stay above 121, that's going to be bullish. It's still in an uptrend right here. It's still above the middle Bollinger Band. So if it can get back above 121, that's bullish. It has to get back above EMA 4 at 123, and then it could get cruising again. And then to the downside, you know, if 121 turns into resistance and it's trading below, that's going to signal downside risk. Look for a potential bounce off of 119. If that 119 failed to hold, then you're looking at this low down here. You always go for the recent low close, and that's the bottom of the red candle, and so 117 would be the target, okay, if 119 broke. Okay, let's look at eBay. eBay is reporting as well, and yeah, so this has been cooling down, pulling back. It was trying to get a move going above that 50-day simple moving average. You could see the red flags. I mean, it had the black candle, it had you know, it had several red flags here. It's finally pulling back. Yeah, this is the way it goes sometimes. It takes a little while for them to finally pull back. And yeah, so this is came back and it filled that gap today. There was a gap between high of day on the 17th and low of day on the 18th, and today's candle did pull back and fill that gap. And so yeah, if that 41 level turns into resistance, that's going to signal, you know, if that fails to hold, you know, you want to see that this bottom of the gap level hold in EMA 13. If it was dropped down below 41, that'd be a red flag. You want to see that 40-30 level hold. That's the middle Bollinger Band and 100-day simple moving average. If it dropped below 40-30, that would signal downside risk. As long as it's holding this middle Bollinger Band, this uptrend is still intact, but it has to get back above the 50-day simple moving average at 41.75 to head higher. Okay, and to the breakout to the upside, it has to get above the high close right here at 42.22. Okay, so yeah, so keep an eye on eBay, and then finally I'm going to finish with Chipotle. This closed up today. So it had an up day. It's been trying to hold support here. It's in an uptrend right now on the daily chart. You know, it's been hitting. So basically, it's got this channel going, and it's basically this is a sideways channel, and it needs to break above resistance. So you can see here the chart's wound up pretty good right now. It hit this resistance over here in January, and then it came back and tested that level here in March, and then it came back up and it just tested that level again just right now. It's testing that level, and so basically the big level currently is 340. And then 345. Okay, so if it can break above 340, you know, it's like 344, but we'll call it 345, the upper wick there. If it can get above 340, 345, close above both levels, that's going to signal Chipotle wants to break out higher. And then to the downside, if it trades below 325, that's going to signal downside risk. You're going to have these moving averages back on deck. You have the 50, 100, and 200-day simple moving averages all converged here between 315 and 318. That would be the target to the downside if 325 broke. You know, that's lining up with the bottom of the channel, which is down here at 310. So yeah, so you know, this is in an interesting. This has an interesting pattern going. You know, it's either going to break out above 340 here, or it's going to drop below 325. Above 340 signals upside potential. Below 325 will signal downside risk. Okay, thank you for viewing this video. Good luck to everybody trading. Be safe out there. Be sure to lock in profits when they're on the table, and to always follow the charts. Okay, thank you.